Hey everyone, it's Nick with Us versus Herd. If it's your first time here and you enjoy the content, hit subscribe. If you want to get notifications for when we go live, tap the bell. And if you want to get connected with the UVH fam, you want to get connected with our community, if you have questions, whatever the case is, links are below for our free options trading group and our Discord. If you're here right now, say what up. What's going on, FC? How's everyone doing today? We're back in the saddle. Had a bit of a rough week the last, I don't know, last couple weeks. Guess you could say we're burning the candle at both ends. Yo, Josh, Matthew, Garrett, how you doing? Glad you're all here. Yeah, it's been a while since I did a live stream. I was looking at the end of last week. Let's see here. My last live stream. Hey, what's going on? I'm sorry. Ola Lua. I'm sorry. How you doing? Yeah, my last live stream was February 26th. What was that? So about a week ago, last Tuesday, and then I posted the last half of the week. I posted just some videos. Just been getting smacked around here outside of UVH, outside of trading. Nelson, how you doing? Shreep, what's going on? Yeah, just So as you guys know, if you don't know, I do run other businesses outside of Us versus Herd. It's just been, hey Greg, how you doing? Boris, yeah, Greg, I missed a week of live streaming, and last week, towards the end of last week, I was posting videos, and honestly, the second half of last week I didn't live stream, and then up until today I didn't live stream. So, Albert, how you doing? If you're here right now, say what up. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Wayne, glad to see everyone out here. And just been, yeah, so going back to what I was saying is, outside of Us versus Herd, I'm in the IT field. I do run other businesses outside of Us versus Herd, and someone just cranked the heat up and decided to blast my life. And then, last couple of days, people in my family have had doctor's appointments, and it's just been packed. And I'm also trying to, Billy, FC learned a lesson. I've been learning a lesson every day this week. Not good. Today was a no trade day for me. I did not place any trades. I didn't get myself into any trouble. Pretty much, I'm just waiting and seeing. My positions that I have now, the ones that I'm looking at right now, I have on a strangle on Square. I have the 76 calls and the 72.50 puts, and on Tesla I have the 340 calls for next week. And for Tesla, I'm not looking for it to actually get to 340. It's actually more of just a speculation play. I was just looking for a little bit of a bounce. But if I look at, let's see here, let's look at these 340 calls here. So Delta went down a little bit today, just got flat. So their Delta's at 3 cents now because Tesla's now in the 270s. When I put the position on, Delta was at like 7 or 8. So if we make a run up to like 300 or so, I'll be able to exit the position. Some days are better to hang back, and today was one of those days. Yeah, and that's kind of the thing that I was going to talk about with my video titles. Like, you can't time the market. Also, some days it's worth getting aggressive, and it's worth it. Some days it's not. And there's a lot of overreaction. Like for me personally, with the market and the way that it's been going, I've been adjusting my strategy and going back to the way I traded in a low volatility market where I'm not going in on day trades where I'm getting in and out within 10 minutes or an hour or 2 hours. In that case, I set trades up for this week, next week, or the following week, and I let it play out, and I be patient, and I play defense. If I want to play defense, I get in something else. If I want to get into something else, I don't get all crazy where I'm trading the individual bars, because you'll literally go crazy. And catalysts right now are kind of weird because the companies, they didn't have a great earnings season, and now we have this every day it's trade talks with China. Trump wants to talk to China, blah blah blah. And honestly, like Trump just wants to talk to China to get the market moving in a trade deal before the 2020 election, so he can solidify his position and say, hey, under my leadership since 2016 through 2020, the market's up 50%, 20%, whatever the case is. I think right now we're currently up about 25 to 30% since Trump was elected. So, I mean, those are bragging rights, but he wants to push it higher. Right now, I think what Trump is scared about, if you're looking at the S&Ps, Trump is definitely scared that we're just not going to go up anymore. Hey, Baron, how you doing? Learned a big lesson today? Learn from it, grow from it, man. But I was talking about this with some other people as well, is that, a lot of people were counting on the rejection up here at 280. We did almost get the 282. It went to 280. What was the high? It was 281.87. And the video title kind of like nobody can time the market, And if we're looking at Monday, I don't know if anyone traded on Monday, but if we look at it, did anyone think that the market was going to start at 281, almost 282, drop to 276, and then back up? And a lot of people were like, "Oh yeah, I've been shorting, and I've been shorting up here," and that's the case. Felix, thank you so much. Hey Jeff, how you doing? Obviously, shorting up here, definitely I like to play the support and resistance where, you buy the support, you short the resistance, and if you bust through, you have some protection in place. And, we were busting through, and if we're looking at these last 3 times, like in October, we came up here. In November, we came up here, and December, you came up here. But if you look at these charts, it was immediate rejection. We didn't stay up here. We weren't just chilling. This was immediate rejection. We bounced up, rejected, bounced up, got rejected, bounced up, got rejected, except for this one got rejected really hard. And then, we've been on a bullish run. We've been on a tear. You bought the dip, you would have made some money. FC, you'll recover. I know you will. 200's too easy for you. But as you can see, like, what's the difference right now? What's the difference right now is like if you're looking at the charts, I mean, intraday, it looks a little violent, right? Intraday looks a little violent. Yesterday, if you look here, we closed barely unchanged. And then today we're down 0.61%. I mean, we just kind of had a steady decline all day. It looks intense. But if you're looking at the bigger picture, which in a slower market, like I like to look at the bigger picture. Like what's the bigger picture? In a slow market, you got to be more big picture versus, hey, let's get in this right now. Unless you were like shorting Tesla on that China deal, on that China tariff thing. Francis lost 500 this week. Billy's down, lost 135. Yeah, it's been tough. So, for you guys, like, I think right now it's about being bigger picture, not necessarily being in the day trades, And if let's go into the 2-year here. And let's focus and kind of compare. Let's tighten this up a little bit. Okay, so up in here when we were getting rejected, I've definitely mentioned this before. You know, kind of up in here around the 280 area. This was back in March of 2018 and February 2018 in the 280 area where we had some trouble and got rejected, which we're having this trouble. We were having this trouble in here. But once it started consolidating, like when it started not to move back in July of 2018, when it started to consolidate, yes, we had some up days, we had some down days, but we basically kind of floated in this area, and it eventually kind of broke out higher. Now, I'm not saying that's what's going to happen this time at all, but I think it's important to understand that this right here is a lot different than up in here, and it also feels a lot different. If you were trading up in here, you can definitely tell the difference in the markets when we were trading these days versus these days. And you can see how big these bars are and how small our candles are right now. You know, we're starting to get some bigger ones and a little bit more volatility over the last couple of days, but honestly, nothing compared to like these candles here. We've had some huge up days. We had huge down days. And right now, we've had small up days followed by small red days, you know. What do you think about GE? Nelson lost 300? Yeah. FC let the fills and trades come to us, forcing anything makes it worse. Yeah, so like for me right now, I don't feel bad about not making any trades. And like if you over trade in this market, which I was over trading down in here, I was over trading a lot just because I thought that volatility was going to pick up, and it just didn't, and we were getting bled out. So right now the approach is just kind of take a back seat, go slow and low. You know, understand where the market is heading. Like, it doesn't matter where the market has been. We care about where the market is heading. Is the market going to head up? Is the market going to head down? And maybe right now, SPY isn't that great of a deal. I know on Monday, I had an SPY position on here. I was playing the breakout here. I had the, what did I have? I had the 280, I think I had the 281 calls and like the 278 puts. And I was looking for about, when the dip came here, I was looking for a play back up to like 282 area, kind of maybe just a quick swing trade. And we just kept going lower. And when I put this trade on, premium was cheap. And right now, since I put that trade on, I look at SPY positions, I look at SPY, I look at the options, and those positions are 30 to 40% richer. So when volatility was low, we got some good deals. And right now, if we look at the VIX, volatility is kind of creeping up. It's still not as high as it was the other day on Monday when we went from, you know, a low of 13 up to almost 17. But it's starting to creep up a little bit. And let's go into the 1 year here. But in terms of the 1 year on the VIX, I mean, you can still see, let's see, we're at, yeah, just making sure we're looking at the right thing here. I mean, it's still a very descending pattern here on the VIX. I mean, this is still a very descending pattern. And, you know, we've reached up here. Really need to break above 18 to break the trend here. Everyone is overpaying right now. That's why I went on the gotta scale or sell rant earlier. Just got to scalp. Yeah, and scalping is okay. You just have to understand that when you're scalping, you got to be happy with that 10%, 15%. You're not going to be scalping 100%, 100 baggers, you know, triple baggers. You're not going to be, you know, when you scalp 5%, 10%, and GTFO. You know what I mean? And even knowing how to play it, let's be real, there's some luck you got to load up and scalp. Yeah, I mean, so even though there is some action two-sided right now, which is good. It's been a while since we had some action two-sided action. You know, we had, let's go to SPY here. You know, we had a pretty nice dip here. It got bought up pretty good. Was consolidating yesterday, and I think that what people were expecting, we got bought up here. Consolidation. They were thinking maybe we're going to gap up above 280 or so, but that wasn't the case. And I think that people are just getting really tired of Trump saying there's a trade deal and there's not been a trade deal. And how many times on this stream have I said, you know, it doesn't matter what they say, it matters what they have, what's in writing, where do they sign, and they haven't signed anything. So, you know, we're still in the same boat. But now, I don't know why it took them so long. CNBC and the Wall Street gurus are saying, hey, there's no deal. Why are we getting excited? Getting kind of tired of getting excited and getting let down. I don't know why it took them 4 months to figure out that there's no deal. You know, like ridiculous. But yeah, so in terms of you can't time the market. You know, right now when low volatility is, honestly, nobody knows if we're going to go up or we're going to go down. Right now, we have to just concentrate on the support and resistances and trade further out. You know, if you're like today, if I opened a position today, I would be trading for next week already or the following week. I wouldn't be opening a position for Friday because how slow the market is moving. The market is moving so slow right now that most likely the odds are that I'm going to get screwed. And when you put a trade on, you have to think about, hey, how is the market going to screw me? How is it going to bleed me out? And 2 days to expiration, low volatility, and if you don't get the movement, you know, you're probably going to get bled out. You're like, hey, it's a great deal though. It's pretty cheap. It's pretty cheap because they want to suck you in and bleed you dry. So scalped some Apple calls this morning on the gap fill and got a little greedy. Made it out 12%, not 55%. Yeah, Josh, congrats on the winner. Lost a ton this past week trying to swing trade because apparently I didn't trade the movers. Yeah, swing trading right now, you have to trade the movers and you have to push it out. You can't gone are the days where you can swing trade when you have massive gap ups and massive gap downs. This doesn't happen. We've been opening flat. They take the premium out. We're back, everybody. And I don't know what that was about. My apologies. It just said OBS was reconnecting the streaming software now, and now we're back. The stream is continuing. Stream resumed. Okay, I don't know if that messes up the video or not. If you're still here, say what up. I don't know. But anyways, Tesla. Cover this real quick. Tesla, I've been looking at, and Tesla has been one of my favorite stocks to trade, mainly just because it trades the in ranges. So, you know, as you can see here at like 380 and then 250 is a range. So right now it's hard to say if Tesla's really going to retest 250. I think that it really wants to. If that's the case, you know, we'll have to adjust our position and play some defense here. But today, even though we had a down day, you know, Tesla really just consolidated. So it depends if it's trying to think, you know, consolidation. Some people get angry, especially like options traders around consolidations. But people get angry, like, oh man, I can't believe the stock's not moving. I just loaded it up on all these options and stuff like that. And to be honest, consolidation days are the best days to put on. To buy premium, because why? Volatility contracts, IV goes down, options get cheaper. It doesn't mean the stock's not going to move in the future. It just means it's consolidating. And honestly, after going down a lot or going up a lot, consolidation is healthy. Whether it's bullish or bearish consolidation, it's healthy. So what I was looking at here, so if I was hoping that it would go back up to 300, have a bounce here. It touched 270. It was going up quick yesterday at 270. Went back up to 284. Nice day trading yesterday. If anyone was day trading Tesla, nice two-sided action. This is a great chart to day trade. I didn't day trade at all yesterday, just because I haven't been day trading in this environment. But you know, went from 284 down to 270, back up to 284, and then close at 276. So really, really good. Consolidation, always a good sign of reverse. Billy, I think that it doesn't mean it's going to reverse. Taking a pause, letting let's say I mean Tesla did move big, right? Tesla moved big. It went from literally 320 all the way down to 270. So it moved big in 1, 2, 3, 4. So it doesn't mean that it's going to reverse. It can consolidate and then still go down still. But it's good to know that the market is digesting the move. Like, it's good that the market digests it, takes it in, waits to see where it's going and where you're going to go. But as you can see here, based on Tesla, back in here when we had a down move from 310 down to 270, had some consolidation days, moved back up. Down in here, this is a little bit more dramatic. Same thing, like 318 down to 246, 250 area, consolidation, moved back up. Here was more of a bullish consolidation. This is not really a bullish consolidation. This is more of a bullish consolidation. So I think it's going to take a lot, just because of where Tesla is right now. I think that it's going to take a lot for Tesla to be like, hey, people are like, hey, Tesla's going to be $100, it's going to be $150. And I think it's going to have to be something very serious to let those shareholders let go of their stock, let go of their Tesla shares under $200. And that's why you can see like at like 250 in this area. And this has been going on for a while. This isn't anything new. Like, I mean, this has been going on for years. Let's go to, and this is the 2-year chart. Same thing. And the range is still intact. Down here, 242, hit all the way up to like the 380s, came back down, went back up, came back down. So I mean, this is nothing new. And when it gets down in these ranges, people buy it because, well, they run out. People don't want to sell their shares. I think unless something very serious happened, there's just so much promise of the future with Tesla that people aren't going to let go of their shares at like 100, 150. Like, think about it. If you were holding shares, and my average on Tesla was $150 a share. I just got tired of waiting because it wasn't growing for me anymore. So I took the position off. If you have shares that are $150 a share or $100 a share, whatever the case is, are you going to be really concerned that Tesla dipped down to 250 from 300? Not really, because you're the people that are holding those shares are thinking, okay, 5 years, 10 years, 20 years from now, they're thinking it's going to be like the next Apple. It's going to go $1,000 a share, which, I mean, it could. That's a pretty large market cap, and all things considered, whether you're bullish or bearish or you believe in it or not. The thing is, so far betting against Elon has been in a losing position, and even though the media kind of alienates them and treats Elon as a bad guy and stuff, at the end of the day, he's an entrepreneur. He's pushing through. I doubt Tesla bulls will let it drop that low regardless of the news. Yeah, I mean, I remember when they would crash the stock because somebody reported like somebody got in a car accident and died, and like everyone gets in a. It doesn't matter what market, whether you're in a Nissan or a Ford or whatever. People die in cars all the time, every day. It just so happened to be a Tesla this time where they, it's like, well, maybe it's not that safe, but. And then they got hammered because, well, they got hammered this time because the Consumer Reports, they said that they took away the recommendation. The last time that happened, I don't remember, it was somewhere in here. That happened before in the past, if you guys have been following the stock. And Tesla and Elon, they rolled out a fix, and then they got back the recommendation, and then it was like a week later and they were back up. And then it just so happens that this Consumer Reports news coincides with the China news. So China stopped the sale of the Model 3 because they found that some of the imports weren't labeled correctly. So not only did they stop those that were coming in, they said that you should stop selling the ones that are already in the country, right? Which I'm assuming they're going to fix because China is a big market for them. But all these things, it require patience. These things aren't just going to work out tomorrow. Like, you put a trade on, it's not going to be like tomorrow. I mean, it could be, but you don't like when you put the position on, you don't know that, and you can see, how much richer Tesla Premium got. And even though it dropped a lot, it's still not even that. It's still not even that high. It's still not even that high from the last time that it was in these ranges. When it was in here, I mean, we were trading at like 95. Right now it's at like 69. So. Rich, thank you. Would trading straddles be good in this environment? Albert, I think straddles you'll overpay. I think the way to make money in this environment, you're going to have a bullish or bearish skewed strangle, but you have to make sure you get good pricing, and also you have to have the time. You have to make sure you put the timing out there a little bit. You can't be trading within days. I mean, unless you have a really big mover, but like Tesla, I mean, stocks aren't moving that fast right now. Netflix had a very bullish day despite the market. You know, went from 350 up to 360 almost, 352 to 360. So, Drucko, what's going on? The vlog, everyone is trading Tesla. Yeah, the reason why everyone's trading Tesla and Netflix right now is because in a low volatility environment, these stocks are moving. So, like options traders, people like me, people like you, are gravitating to these stocks because they're actually moving, actually doing something. Like Alibaba today, like if you look at Alibaba today, like I traded Alibaba a lot. I've been trading, and but I've held back. I mean, Alibaba was down 83 cents today. I mean, this is a lot. Looks like a lot of movement, a lot of drama, but you wouldn't have made a lot of money in this. Like you wouldn't have made too much chop, and it's only down 80 cents, which for Alibaba that's nothing. Moving 80 cents is nothing. Moving even $1 or $2 intraday is nothing. It's not enough to this type of chart right here, like Alibaba, will bleed you out. GE, which we've been saying for a while that talking to FC about this, that we had a pack that over 10 we would start shorting again, and I wish I held on to my own advice, because everything has been coming true. I just haven't been trading it just because it was under 10, and then it was back above 10. I really wasn't sure which way it wanted to go, because if you look here, for me, once it starts breaking above like resistances, you have to be on watch. Like, is this going to have like a bullish recovery? But apparently not. So I would say this probably can go to 7 now. I guess the reason why I was scared to short the pops is because of how much it was gapping up, and the momentum was real. Like, this consolidation period looked really healthy. Then we had this gap up here. Consolidation looked pretty healthy, and then we had this almost hitting 12, and ever since that, it was like the nail in the coffin. Now we're at 9, so we could have made some major bags on this, but we didn't trade it. And today, I mean, their business isn't doing well. Today, I mean, these were up 200%. If we look at these 9 puts for this week, let's see what these were trading at. The 9 puts. Yeah, I mean, the 9 puts, I mean, this is crazy. The 9 puts yesterday were trading for a low of 1 cent, and this morning hit a high of 28 cents, and right now trading at 20 cents. I mean, that's a great return. That's a great return in this environment. But would you have put this position on with only 2 days left? Like, buy the 9 puts and then because the market has now trained you that, hey, you're most likely going to get bled out, and then it rewards them. So you kind of have to do the best you can. Like, right now, I think is a pretty confusing time in the market, because we're getting conditioned to a certain atmosphere, but then you have movers like Tesla and GE that are bucking the trend. So, mentally, I think it's exhausting. GE has some positive things. No denying that last leg is literally like help. I have 9 puts with 16 days left. Greg, are they up? Don't tell me you're up more than 100. Garrett, yeah, I mean, I never used to trade GE, but then I had on this drop in here, when it went from 12 or almost 13 to 10, I made so much money, it was ridiculous. It was ridiculous. So ever since then, I would never trade before that, but ever since then, it had a little place in my heart. Tan, what's going on? ATVI? Yeah, ATVI I've traded a bit in the last few weeks as well. Right now, I'm waiting for it to break out of range. If we can get above 45 or if we can get below 40, we'll make it interesting. But right now, it's just consolidating, like which way you want to go, man. What do you think about talking about taxing stock trades? What do you mean? Are you talking about how much they charge taxes on your capital gains, your short-term gains versus long-term gains? What do you think ATVI being beaten bad lately? Room to go up. ATVI, I think, is in a dangerous place. Well, I mean, it's sitting at multi-year lows right now. But the reason why it's sitting at multi-year lows right now is because it was news-induced, based on the performance of a company. So their company has not performing very well, and the stock price is starting to reflect that. It could easily go to the 30s. I would be happy if it cracks 40 and goes to 30. We'll make some good money. Or cracks 40, goes to 35. We'll make some good money. But if I think in order for it to recover, it needs a catalyst, and right now the catalysts are not good. AutoZone, I traded AutoZone a long time ago, a couple times, and their options are not liquid. I don't even remember the ticker. What is it? AZO? Yeah. So I mean, it's a high priced stock. It's good to trade, but their volume is just terrible. So if I was gonna do anything in AutoZone, I would sell premium in here. It's kind of like BKNG. Volume is not good, so you don't want to buy premium because you get screwed a lot of times. What you want to do probably is short premium. Let's see what the monthly is. Yeah, even like the monthly expiration, I mean, there's only like not even 50 added up on the calls, and not even 50 added up on the, well, maybe 50 on the puts, but nobody trades it. So it's tough. Like when you're trading, you want to look kind of like for supply and demand, right? Okay, can I get in and can I get out of this position? BKNG, I have traded a lot. I haven't traded it in probably like a year, but BKNG, great stock to sell premium on. If you're looking to sell premium, not great. It has more liquidity than AutoZone, but not great. But you really have to when you sell premium on this, you got to choose a direction, and you really have to stick to your pricing. You don't want to change the pricing. You don't want to go. You don't want to take less than what you deserve. You really want to get the pricing right. And when you sell premium, it's really easy to figure out the price, because then you're selling the width of the strikes, right? So you can easily figure out what that would be. So for if I were to sell a vertical put spread right here, let's see what they're going to give me here. Yeah, $1.45. I probably wouldn't take anything less than $1.35 for this, because then your max loss is going to be your max loss. This is 250, so your max loss is going to be $1. Actually, you're probably going to get more like, you probably don't want to go less than $1.20 because it's 250. So you probably don't want to go less than $1.20. You go down to $1.15, $1.10, it gets really dicey. I try to keep these kind of trades like a 1-to-1, where you go like $1.25, $1.20 at the latest, and if you really want it, $1.19. I wouldn't, so it's easy to figure out pricing on low liquidity stocks when you're selling premium, but it's really hard when you're buying premium. I hope that makes sense. I don't know if that helped anybody or if I was just ranting. I don't know. Sometimes you guys just got to stop me if it's like, hey, just stop, man. Stop doing that. Do something else. Harish, I bought the GE11 calls and then they tanked yesterday. Learned a lesson: never buy on a green day because all stupid news. Well, I don't think it's about buying on the green day. I think that you have to understand the catalyst that brought GE down. It's serious. I would have exited my position based on if I was long calls and all these people are issuing downgrades and all the news swirling around it is terrible news. You got to recoup what you can and switch to puts immediately to get back what you lost. Like GE, I know. So GE was hyped up because they sold their, what do they sell? Their PharmaBiz. But you have to understand when they sell a portion of their business, it's not necessarily good. I mean, if you look at Sears, I mean they sold off portions of their business until they like no longer existed, and they're barely clinging on. They're still here, but it's not looking good. Aurora Cannabis. I actually haven't looked at these guys. Liquidity on these look good. Killa Bees, what's up? Glad you guys are still supporting me after I took a week sabbatical from trading, from streaming, not trading. Sorry. Hope you guys forgive me when I go to Mexico in a week. But I'll have content. I'll have content for you guys. If there's any content that you guys are looking for, let me know. ACB liquidity looks pretty good. Let's see, going a little bit further out. Yeah, I mean, liquidity is not... I haven't actually traded ACB before. I've mostly traded CGC and Cron. But in terms of this, I mean, this looks pretty bullish. I'd be wary of this area right here where it's got rejected in the past. You know, got rejected here, and looks like it's getting rejected right now. So you could trade it from tight... It would be a tight range. For me, I would like to trade the breakout. So I would like to see... if it can get to like, actually it did today. See what is, a lot of action at open and then just a disappointment and then consolidation. So if it can get to like 850 and push to 9, that'd be a lot more exciting than where it is now. Bouncing between, 7, 8 and 7, it's gonna be tough to make money. If you get a breakdown below 7, could be more fun. Break up above 850, I think would be more beneficial. So good looking out. Let's see what premium's coming in. Yeah, premium's not that expensive. It's looking at, if you're looking here, 77-cent move for next week. Dollar move for 3 weeks out. I'd probably be more inclined to do the 3 weeks out. Premium's not that expensive, so you could get some deals. If you bought like the 850 puts for March 22nd, costs you 30 cents, and it goes up to like 950 or so. Could make some money. 925. A New York City politician is saying that she's going to add a tax on each stock to trade to pay for new government ideas. New York City politician is saying she's going to add tax on each stock to trade to pay. Oh, is it kind of like a product tax or something like that? Well, I don't think they should come after the trader. I think they should go after the brokerages. I mean, the brokerages make money hand over fist. But the problem is if they go after the brokerages, I mean, they're going to make the retail trader pay anyways. I mean, I'm not loving it. I think there's probably other ways they can make money. I mean, but yeah, I think that's going to be a tough one, especially like in New York. I think that'll be very tough for them to get. I'm sure her approval rate or her approval rating is gonna take a hit. What does a roll mean when you have options? So rolling. I know we call it rolling, but really all it means is you're exiting the position that you have now and putting on the same or similar position for pushing out the expiration. It's very that term's used a lot in when you're selling premium, not so much when you're buying premium. So like but you want to roll for a credit and not for a debit when you're rolling. Like let's say for instance, let's go over to Tastyworks and let's just say I had on a put spread. Let's see here. let's say, yeah, let's say I had a put credit spread on, and I had it on for this is 7 days out, and SPY went down below like 260. I was getting tested, right? And I'm getting close to expiration. So like when you're selling premium, you want to use time to your advantage. You don't want to take a loss. So sometimes what you can do is, if you're in a position, you can put this position on and then you can roll it. And what you do is you just right click on your position and click on roll, and you're able to roll it to a different expiration. But you got to be careful about it, because you may not be getting a good deal and you may not be able to recoup your funds. It might just be better to take the position off and not trade that anymore, or trade something else. It really depends if you still believe in the idea that's going to work out, and it depends on option pricing, if you can get a credit for it. If you're paying for the roll, it's going to get difficult to get out of the hole. You could make some money back, but you may not get out of the hole. And a lot of times people keep rolling and rolling and rolling, and they think that they're doing good, but they keep losing money, when it would have been better just to take the position off and wait and put a new position on, like when you felt the time was right. Content and videos about specific small, low capital account stocks and what trades you should put on, or how to analyze and determine what trades to put on. I did put a video out last week, boss, about trading options with a small account on Robinhood with some stocks. I also did a video last week about the top 10 ETFs to trade, or at least the top 10 ETFs that I like to trade, that I'm pretty sure there's probably ETFs in there that you haven't traded before, that would work for a small account as well. So check those videos out, but I definitely have some videos in the pipe for the small accounts. I'm definitely on it. Any other stocks you guys want to look at? We got about 18 minutes or so. I definitely appreciate everyone's rocking with me, even though I took a week break from live streaming. Not necessarily a break, but it's not because I wanted to take a break. It's that sometimes your schedule doesn't allow it, and sometimes same with trading. Some people are like, hey, I gotta trade, but sometimes your schedule doesn't allow it, and it's okay. Sometimes it's good to take a little break from trading. Whether you're winning or you're losing, it's good. Yeah, Snap. I think Snap has been a tough one. It's been trading in a very tight range. It's like, for me, I think Snap is on the verge of wanting to break out. I mean, they had a good earnings, they gapped up large, but it's like, what's gonna push them over? Jeremy, I did at the very beginning, we went through SPY for about 10 minutes. So after this video, if you want to watch the recap, I did talk a lot about SPY and the S&Ps and VIX. So what is it gonna take Snap to break out of this range? That's really what we got to think about. Had a nice gap up. It broke above resistance. It's starting to make a trend up higher, but right now it's chilling. Billy, I don't know if Snap will sell off. It could just chill here. I mean, if you look at this month right here, it literally stayed the same price for a whole month, and it could happen again. And if you like trading it, but you got to be careful when you put positions on. When we have this type of consolidation, you have to be careful that you don't get bled out, because this could go on for a month, it could go on for 2 months, and if you put a position on for next week or even this week, I mean, you're dead. That position is gone. So, I think that Snap will try to. At this point, I think it'll try to make a run at like 13 area. I think it wants to. But what's going to set it off? Is it going to be an upgrade? Is it going to be some well-known investment firm is buying the stock? Is it going to be hype? The one thing that I will, unlike Facebook, you can tell Facebook's in the media almost every day. Someone's talking about it was in the media today because Mark Zuckerberg put out a note on Facebook about making Facebook safer, more private, and that kind of thing. But you never hear about Snap. So there's less interest in it. And obviously a smaller platform, so I think it's going to chill here until it can get a catalyst. Thinking about that, but talking about Facebook. I mean, had a great run from 160s up to 172s last couple of days. Closed green. I mean, this is insane run here on Facebook, and it closed up above this resistance here. We can see if it can make a run at 180 now. So that was pretty crazy. Like Facebook, Amazon. What did Amazon? Amazon was down 23 bucks today. I didn't see that. I mean, but it did go up like 80 points in a week. So Vail. Yeah, PCG as well. PCG still trying to recover here. It's trying, but it's just going so slow. But Vail, the only thing I remember about Vail is it like being some sort of like penny stock. That was, but I've never really traded this. I mean, yeah, it went from $2 up to $16. That's pretty crazy. But I don't really know too much about the company, so I can't say what. Oh, what did they do? A reverse split? Was that a reverse split? What was that? Oh no, it wasn't a reverse split. You gotta pay attention with the penny stocks, because they can reverse split. They can go from like $2 to $20. Nice thing about not Tastyworks, Thinkorswim platform, it does tell you when a stock splits or reverse splits, and it will show it to you little symbols down here. SMAR. Smart Sheet. Man, volume not good. Volume is not good, and the selection that you get, like this would be, I think this would be very, very tough. I mean, even though the chart looks good, I do like trading these 52-week highs here, because it oftentimes breaks through or it gets rejected, as you can see here. After it got over 33, it had a nice run up to 39, almost 40, and now, I mean, this chart looks good for trading, but if you look at your options here, like a $5 wide strikes, that's going to be tough. That's going to be really hard. And there's no volume on them. So, you know, you either got to pick you either got to pick 40 or 35, and anything in between is going to lose money. So that's tough. The Brazil for Vail, I'll have to look into it. I will look into Vail. Sounds interesting. Unfortunately, it sounds like people are going to get hurt. That's always the case, isn't it? Man, KMI. That is. Baron, where do you find these stocks? You're picking up on a scanner here. Volume is okay. Strikes are better, 50-cent wide strikes. Volume, I mean, you're gonna have to play the one with the volume. Like these have zero volume, but the ones out of the money have some volume. These has a volume. Steven, it is. HO Mexico. they sell them by the cases at Costco. So long cost, right? So this one you just gotta be careful about trading it. Another 52-week higher. You picking these up on the scanner, Baron? 52-week high scanners. Yeah, you see them. Let's see here. AMC and KO. You got it. AMC, they had the gap up on earnings, but it looks like it's fading back down to like the 14 area. Wouldn't be surprised if it, you know, cost earnings tomorrow. Okay. Oh, Baron, you own both of them. Sell and reload on the dip, but Yeah, AMC I think is generally a slow mover. Volume is not great on AMC, but does look like what might not be a bad idea to pick up the 15 puts. Let's see there for next week. I would like for a $15 stock. I would probably go. What are these? I would probably go like 30 days out if you could. Not great volume though. Let's see here. Maybe the yeah, it's tough. Not loving it. The Aprils, you can go out to April, 43 days out. But volume's not great on it either. So it does look like the chart looks like a good opportunity, but then like when you trade options, you need a couple things to happen in your favor. Volume, option pricing needs to be good, and the chart needs to be looking good. And if you only have part of the recipe, you can't. It's going to be hard to be successful. And then KO. We were talking about this in our Discord today, actually. I think someone else has KO, and they're like, "Why isn't it moving too much?" And you have to understand each stock has their own personality, and KO is no longer a growth stock, so it's not going to move up very fast or move very fast at all. It does move up, it just goes slowly. Like if you like any stock, it needs a catalyst. Like last time it ripped up from 45 to 50 is because their earnings was a catalyst. Here it ripped from 50 down to 45. Earnings was a catalyst again. So it may not even move that much till next earnings. So you just gotta be patient with it if you're trading this. But in my opinion, Coke, you waste a lot of money on options. If you want to short options, Coke may be the one, but the premiums are cheap. Like a lot of people get into trading options on Coke, especially like on Robinhood and stuff like that, because they push to the top as like a popular stock and all that, and the premiums are cheap. But what they don't tell you, the reason why the premiums are cheap is because the stock doesn't move. And then when the stock doesn't move, the premium goes to zero, and then your investment goes to zero. So, the more you know, the more you learn. Hopefully you take that knowledge that you're learning from those positions and you adapt. Like everyone's adapting. Like it doesn't matter how good of a trader you are or a new trader or whatever the case is. You're always learning, you're always adapting, because why? The market's always changing. No one knows, hey, is the market going to be up 100 points tomorrow or down 100? Like, we don't know. As a retail trader or retail investor or whatever, we have no pool. We don't know which way it's going to go. We have no connection with decision makers to make things go. And if we did, that'd probably be insider trading. If I knew the CEO of Coke and he told me something and I placed a trade, you'd get in trouble, because then you're like, well, that was insider trading. And you're like, hey, why did you tell me that? But then you did the trade, so it's just like life. It's hard to win. Adulting is hard. Being an adult it's hard. It's hard. You got to play by the rules, and if you don't play the rules, then there's jail time. So, yes, you can make money doing things illegally, but then you go to jail, and then But then you make money legally, and it's a lot harder. You don't go to jail, but you don't get rich that fast. And I'm sure like a lot of people that are here that want to trade options are thinking like, okay, I could get rich off this. In reality, like, options trading, yes, you can get rich. Yes, you can make a lot of money. Yes, you can do all these things. But it's just like anything, like any business, it takes time. You make mistakes. You have great days, you have bad days. It's just like any type of business, that I've ever been involved in. You have great days, things are going well, things are clicking. Some days, some months, you're like, man, what in the world happened? Why did I do that? Why did this person do this or why did that person do that? And at the end of the day, you just got to do the best you can, adapt, change the way you trade, change the way you angle. Like when you're like, if your business is facing difficulties, like if your business is facing trouble, like maybe you're not getting enough customers, or maybe your customers are leaving you, or whatever the case is, you have to take a step back and say, hey, why is this happening? Do I need to pay more money for marketing? Do I need to fire this guy because he's pissing people off? Do I need to do this? Do I need to do that? It's the same for trading. It's like, okay, you know, why is trading not going well? Take a step back. You know, what kind of like trading Coke? Did I make a mistake trading Coke? You know, don't mean to point you out there, Stephen, but you know, it's important to always learn from what you've done and adapt to move forward. You know, so. Anyways, got a couple minutes left on the stream. Yeah, if you're trading stocks like Coke and you want to make a trade there, like don't trade very big. Like keep it small. Don't go crazy. Just keep it small, and see how it goes. If you're consistently winning trades, you know you make $10 10 times, it's $100. But then when you make $10 and then lose $50, you lose $40. It hurts. So, you know, my mentality for trading is small, stay small, keep a low profile, and the small trades add up. They add up. Like, sure, we'll hit the 1,000%, 500%, but it's not because we set out to do that. It's not because we set out to do that. It's because circumstances and the number of occurrences. The more occurrences you have, the more chances that will happen, but it's not like the main goal. You know what I mean? So it's not like my main goal to make 1,000% on a trade. If it happens, it's like, that's great. But it's not the goal. It's not the goal of every trade. And I think that's where like a lot of new traders get caught up. They try to make these big stacks, or they try to make money quickly, and they risk a lot, and then they lose a lot. Trading options is not a game. It's not something you can play around with. This is real money's at risk. This is not paper money. This is real money at risk. What do you think about Zynga? So Zynga is on the verge of turning around their business, and they're getting profiled in magazines like that. Let's see, are they at a multi-year high or just yeah, multi-year high? So a stock like this, you know, they're about to approach their 5-year high. You just got to buy the dips. That's what this is about. They got people, investors are piling in, and it's due to the business turning around. Next quarter, what it'll depend. You know, what do they say? If next quarter is good and they keep doing, like, how it works is if your business does well, shareholders get rewarded. When your business does poorly, you know, shareholders hold the bag and they don't get rewarded. So it's kind of like, you know, if you look at like successful companies like Apple, every quarter they were posting record profits, and shareholders are getting rewarded. Zynga has a bad track record because they weren't doing well as a business, and they were pushing through, and they could have went out of business. But the CEO is turning around the company, and if they had a really great quarter last quarter, if they keep delivering, I mean, it could be a $10 stock, could be a $20 stock. Personally, I don't get a whole lot of value in their company, but that doesn't mean there's not value there. So just because you don't value the company doesn't mean that the company's not valuable. It doesn't mean the company's not making moves. You know, I think a lot of times we let our personal opinions get in the way. It's like, well, I don't want to invest in Domino's because like their pizza's terrible, but their stock is doing great. Their stock is fine. I mean, they had a bad quarter last quarter, but their stock's $248. You know. So, anyways, I definitely thank you guys for hanging out with me. I know it's been a while since I live streamed. Not because I wanted to, not because I didn't appreciate hanging out with you guys. I mean, I love hanging out with you guys. I love talking stocks. You know, it's definitely been fun. Definitely appreciate everyone that showed up after my 1-week break. So we're at an hour. If the video was of value to you, hit the like button. If you want to subscribe, hit subscribe, and then we have the links to our socials below. So you guys take it easy, stay safe, stay green. Let's go get it.